Meet Kevin Black Friday sale is now live. Go to meetkevin.com. You have got to be freaking kidding me. Jeffries is suggesting Tesla stock would go up if they just canceled the Cybertruck. What kind of short-sighted, moronic, dumbass idiot do you have to be to suggest that? Jeffries, you do not realize that the Cybertruck is literally the catalyst, the ultimate epitome of the test of Tesla's ability to innovate. Of course, we have down the road, full self-driving, RoboTaxi, driverless vehicles, Optimus. All of that dies without the Cybertruck. Canceling the Cybertruck would literally be the end of Tesla's innovation cycle. It is the most moronic suggestion I have ever seen. And folks, here it is. I kid you not, it is right here. Jeffries analyst Felipe Huchois. Hucho this, boy. Cut the price target for Tesla to $210 per share. These analysts, they literally just follow what the stock does. It is so I read this crap on a daily basis, and it's rare that I have forward-thinking price targets. So I usually ignore the price targets, but I do like the perspective that I hear, except when it's stupid. Then I call it out. The price target reflects reduced earnings and free cash flow estimates. The analyst argues that Tesla looks stuck in the slow lane for another 12 to 18 months, unable to capitalize on peer delays while European legacy OEMs launch 25K EVs and Chinese car makers set a new pace of shorter product cycles. You're an analyst. You have absolutely got to be fracking kidding me. First of all, let's break this down one by one in reverse. China is not only going to grow below trend, but the darn country is essentially trending towards recession. You have, and that's way worse than what we have in America because they were supposed to be growing at 5 to 8% per year. The last 20 years, they were growing at 8% a year. Now we're talking about growing maybe 4% or closer to zero. It is a massive shift for China. China's government has told their citizens to take on as much debt as possible, only to slap them across the face and say, don't have debt. They have shell-shocked their customers, their consumers, not really customers of the government. Well, maybe they are in China, I don't know. But anyway, China's economy is not the one to be bragging about, especially when these shorter product cycles for Chinese EVs you're talking about, you're mostly referring to BYD and you're talking about hybrid vehicles. Let's be blunt here. The competition that people keep referring to when it comes to Chinese cars are battery hybrids. Gas, battery together. Very little margin in that. BYD does good. They have figured out how to do margin in hybrid. But let's see them actually pull sustainable margin on just BEVs, battery electric vehicles, get the margin out, and Tesla kicks their butt in every metric, hands down. And they're not even focused on FSD or autonomy. Why? Because all they care about is selling hybrids. Okay, good for you guys. I know there's a priority in getting battery electric vehicles out as well at BYD. I don't want to bag on BYD. I do like BYD. They are a competitor. But let's be clear. The Chinese economy is not the one we need to worry about. We should be thankful for the Chinese economy basically experiencing deflation. I shouldn't even say basically. Their producer prices are negative. Germany's producer prices are negative too. They just came in year over year down 11%. Last month they were down 14%. Guess where we have factories? Oh wow, China and Germany. Guess where it's now cheaper to manufacture Teslas? Wow, Germany and China. This is absolutely fantastic for Tesla. European legacy OEMs planning to launch a 25K Euro? Are you a moron? How many times have we heard legacy auto say, we're gonna have a 600-mile battery? Doesn't happen. Oh, we're gonna have a high-quality EV at scale and profitability. Really? Where? Show me one. They can't even make a profitable $50,000, $60,000, $70,000, $80,000 electric vehicle. Not even Rivian can make a profitable $80,000 electric vehicle, and I would rather invest in Rivian than the legacy autos, which are probably all going to go bankrupt. Rivian dodged a bullet. I'm going to give it to them. They're on the up and up. They're doing better. But anyway, now, since we're working backwards, Tesla being in the slower lane in the next 12 to 18 months, have you not remotely considered the fact that we have this little catalyst called lower interest rates? and interest rates are what drive Tesla's profitability, and we're at the height of interest rates now, we're probably at peak interest rates, which means you're making the bear argument saying Tesla's in the slow lane going forward for 18 months, when the reality was the last 18 months as you're ramping Giga Berlin and Giga Texas. So as we actually ramp in a lower interest rate environment, you're saying that's the slow lane. The slow lane's here now. Oh my God. We appreciate future value from FSD or Optimus, but not as near-term substitute for performance. That's fine. I actually agree with that. In my estimates for Tesla, I purposely ignore Optimus or well, I do include some FSD, like a 10% take rate. But I ignore Optimus and anything above 10% for energy, mostly just as a margin of safety, okay? These things are wonderful. They're great. But anyway, as BEV penetration continues to grow globally, one of Tesla's long-term edges is to remain one of a handful of global low-cost producers along BYD, Stellantis, and Toyota. Okay, the analyst believes Tesla canceling the Cybertruck would probably be positive for shares. Again, totally moronic. What are you, some short-term like trader or whatever? And even at that, you would be wrong. Tesla would plummet if they canceled the Cybertruck. They would literally plummet. It would probably go down 50% because it would say Tesla failed. It would be the worst thing you could do for Tesla. With 2024 already a lost year for growth, it would help Tesla refocus on an edge that was built on simplicity, scale, and speed. So what you're saying is, let's sacrifice the long-term potential that Tesla has for some short-term gains. This is stupid. Thank you for a lower price. I can increase my exposure to Tesla, either through my ETF or myself, whatever. That is not insider information or plan. There are no plans. There's no plan. There's nothing. Okay, we gotta be careful with the disclaimers. Anyway, with 2024 already a lost year for growth, it would help Tesla refocus on an edge. Who cares? Who cares? We've already priced in 2024, man. Get over it, bro. If we type in Tesla right now, and we go to the financial analysis for Tesla, right now, what we're looking at for forecasts on EPS is 310 for this year. That is negative about 15%. That's this year, bro. Guess what next year is pricing in per Wall Street? 26.8% growth. Not exactly sure where you're coming up with a lost year for growth. It's literally a return to growth. Wall Street's then projecting 37%, 33% thereafter. 37% in 25, 33% in 26. I see 35% on average going forward for the rest of the decade. Instead of spending a significant amount of resources on the Cybertruck ramp, the management should focus on high-volume global segments and supply of the 4680 for the Model Y. Bro, nobody buys a car because it has the 4680. Don't get me wrong. In the long term, the 4680 will create substantial increases in performance, speed, energy efficiency, cost efficiency. But the reality is right now, people are buying cars and they don't ask about what battery is in it, unless you're in the tech world. Nobody cares. Nobody cares. What's the range? What's the price? That's what I'm gonna buy. So let it be the lithium iron phosphate batteries that they're using, the cheaper ones from China. They've gotten very good. They're very, very good. Anyway, this is frustrating. This person's a moron. I can't believe we're even making a video on this.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.